up until the last week or so, it had held up relatively better than other big cap tech names. Where do you stand on the stock now?
I mean, we still like the stock. There's obviously been pressure from a slew of revisions from some of the supply chain that feeds into Apple that's creating concerns about the units. And as you know, the company's no longer going to be reporting these units. So you're going to have these cuts. There's probably going to be additional press reports about downward revisions. Ultimately, I think what drives the revenue for the quarter is going to be that ASP lift, which is really, that's not a new story. I mean, the units have been down ever since the iPhone 6. So it's not a new story that Apple's leaning on price increases to sustain and increase the revenue from their iPhone business.
Aaron, Amazon's been bouncing around all morning on this news about its 2 new headquarters and also that new facility that it's going to build in Nashville. It's up higher right now. What's the takeaway for the company and for the stock?
Yeah, I mean, in the headquarters was largely expected, at least over the last couple of days, that kind of had been previewed. So I would say not a big surprise there, especially given big tech centers in those areas as well, or a lot of professionals. In terms of Amazon, I think investors are looking at unit growth, which did slow in the quarter to about 15%. We think a little bit higher on a like-for-like basis. But that was the concern on the quarter. But you still have AWS growing 40% plus, peak margin or at high margins for the AWS business, and advertising growing 60% plus, kind of normalized. And so that's growing strong as well. And you're starting to see better earnings growth, but investors didn't like the unit slowdown. We still like Amazon, still seeing good growth, but investors got a little bit more cautious after last quarter.
Aaron, have investors fully factored in the costs associated with 3 major locations for Amazon instead of 1, and the fact that 2 of those are in high-cost locations, which is sure to hit the bottom line somehow, whether it comes to recruiting or other issues, or, do we just cross that bridge when we come to it?
Yeah, I mean, historically, we have seen very high expense growth for Amazon. We've actually seen better expense management this year, a lot slower growth in some of the operating expenses. We do expect a little bit of an upcycle in 2019, some greater investments, partially by these 2 new headquarters. We think that's largely factored in. I think investors right now are probably more focused on the revenue growth side, which was the concern from last quarter, though.
And Walter, when you look at Apple now and the way it has reacted to these supplier issues, that combined with the fact that Apple's no longer breaking out units for iPhone, how should an investor think about the turbulence that comes from these reports, rumors, extrapolations that in the past haven't always proven to give the best view of where Apple's headed?
And I think that's the important part, John. In the past, we have seen reports like this on a number of different occasions. And the company has executed on delivering revenues. In some cases, units have come in below expectations, and they flexed on the ASP. I actually think it's a little bit early in the quarter to start really getting concerned about the units. I mean, the holiday selling season really hasn't kicked in. The 10R has only been out for a week or so. What's really happening here is people have been holding onto their phones longer, and those upgrades may not be occurring in the first or second week the product launches. It could occur later towards the end of the quarter as holiday gift items, whether it's the accessories that they're selling or the iPhones themselves. People have old product right now, and the upgrade rates are at historic lows. So I think that's the thing to focus on, as always, as opposed to just reacting to the latest supply chain data that comes out that, as you pointed out, in the past has not always proven to be helpful to investors.